the nicest way possible. So I'm really just going to explain how, even if you know absolutely nothing, so if you're cognitively impaired, which basically that's a politically correct way of calling somebody dumb. I watch a smart person. He taught me that. So um, I just wanted to share that information. I feel like that's a good little yeah. Well, you're cognitively impaired. You take that one there, Buster. You know what I'm saying? You'll get the last laugh, I promise. But really, when it comes down to the charts, I'm gonna make some things make sense for you guys that probably didn't make sense. Because drop a dollar sign if you guys made money this week, right? Drop a dollar sign if you guys made any type of money this week, right? When it comes down to either gold, Romeo fam, what did I tell you? I think we paid for dinner at a nicer restaurant that we went to yesterday. Don't you think, Romeo? I think we made enough to be able to go to to a higher class restaurant. Because I'm telling you guys, family, like this trading stuff is so easy. I was sitting down with my brother yesterday. We are at dinner, right? Romeo. And Romeo, where you at? Cuz you at work? You gotta show. He looks just like Fred Van Vliet and a Drake hybrid. So do you guys know Drake the rapper and Fred Van Vliet the basketball player? He's a hybrid of both of them put together. His beard is better than both of them. That's all I gotta say, right? That's all I'm telling you. But he was at the restaurant with me, and I really just sat there and just I'm like, yo, buy gold. And he hesitated. He's like, right now? I'm like, bro, buy gold. I'm like, no, why? Like, who just said? Okay, look, as a trader, there's nothing that irks me more than when I say, yo, guys, buy something right now. Yeah, yeah, right now. I didn't say buy later. I didn't say buy in 5 minutes. I said buy. People be messing. Yo, Cash, are we in yet? What do you mean, are we in yet? I'm up 30 points. What are you talking about? I'm moving my stop loss to break even. Are you? You're still thinking about what you should be doing? Okay, right. That's calm. But we were able to just be sitting there in the middle of dinner. I literally looked at the charts all of 2 minutes. I was like, yo, we're buying it. We bought it. Viral movie, right? But what I want to be able to do with you guys is kind of just break down what happened the last 2 days and ideally, okay, I'm curious because there's 32 people on here. What are you guys really focusing on doing this year? Is your main goal to get funded or is your main goal to just understand more on the charts? Because there's going to be two different types of things that we could go through right now when it comes down to this training. And I really just want to know what you guys actually are looking to do, right? Both learn some money, sure. Both. Okay. Because really what I'm going to do, I'm going to start with, all right. So we're going to do a little bit of both. But what I'm going to start with ideally is funding. Funding only works if you have the fundamentals when it comes down to just, you need to know at least like three or four things when it comes down to this. Like you need to ideally know where to enter, when to enter, when to get out, and when to stop trading. Those four things, if you're able to start developing your awareness to them, you're going to enhance the results that you get. So really right now, what I'm going to do is go over just Thursday's move, right? As well as Friday, because I know Thursday, I believe we were looking for buys, if I'm not mistaken, right? We could have been, I can't really remember. Or Thursday, right? But ideally, right, if we let this play out, we could see that in terms of price, Thursday we had no news, but Wednesday we did have news, right? So Wednesday we had news and it kind of really didn't do anything, right? It did a whole lot of nothingness, but we actually bought it in here, right? So for those of you that were on Wednesday's calls, we were able to buy it. I think we actually bought it in here, one of these two places, right? Maybe even both. I know I think I bought it in both, but realistically, what we were really looking for was these equal highs to get taken. So the first place that we got to start at when it comes down to the charts is identifying what is the overall direction of the market. And you can only identify the overall direction of the market if one, you understand the higher time frame bias, which the higher time frame bias on gold has been bullish since October. So if you guys have been following the higher time frame of what we've been going over, right? We've been bullish on the daily time frame since the ending of September. Okay, so this is why, like, did you guys see it? Drop a 1 in the chat if you guys saw me yesterday saying, like, yo, I like the shorts, but overall, I like buys more. Like, I don't want to be selling it, right? That's why I'm like that, because I know that there's opportunities to sell, but it's like, I'll even show you guys a prime example because, right, I'm gonna pull up the chat real quick because I dropped something in the chat and I really want you guys to notice, right? Because what I tell you guys on a day-to-day basis, like, it's one thing for me to say what I say, but then it's another thing to like do it, right? So just taking a look at this, right? So this is my trade history for the last day, right? On one of the accounts that I'm currently managing. And I want you to pay attention to the wins, the losses, and just everything in total, right? So you can see here, I have 1, 2, 3, 4, 5, 6 wins, right? So 6 wins. The smallest win was about $239, right? But then you can see right below that, I have 1, 2, 3, 4, 5, 6 losses. So can anybody tell me, after these 6 wins and 6 losses, does it look like I'm in profit? Yes or no? By the looks of it. Yeah, I might be in a little bit of profit. It looks like I might be in a little bit of profit. Does anybody know why? Right? The reason is simply just risk to reward. On average, I would say my losses are about $50, right? Give or take. My average win, I would say, is about 250, maybe a little bit higher. So that in itself is a 1 to 5 risk to reward just based off of where I'm closing. And this is where we have to understand it's so important when it comes down to not just entries, but exits in the market. We only pay attention to entries. I don't care how good your entry is. When are you getting out of the market? Because I had some trash entries. Like, I'm literally gonna show you guys. I literally had some trash entries today, or exits, sorry, right? So you can see following that, right? These right here were trash exits. Because to me, price went up and I waited to see how it reacted. And to me, once I identified that it looks like it's gonna come down, I closed small profits. I was okay with only being up 30 points, which to some of you, that might be a big move. To me, that's not a big move at all. But you can see the consistency of the losses, right? These losses even shrink down even smaller, right? The average loss here is about $30, right? Then below it, you could see my small wins. Those are basically my break evens, right? And then you can see how we ended towards the ending of the day, right? I had these 3 sell losses right here, right? And I want to show you guys how the day ended because I took another couple positions after that. Where did I drop it? Basically, I caught like another 50 points on the shorts. It doesn't even really matter. But you can see there when I shorted, my biggest loss was $20. My smallest win was $230. So that's a 1 to 10, right? So it's okay to lose. So like I said, small win, small loss, break even, big win. Those are the only possible outcomes when we're just actually following not only market structure, right, but just follow proper risk management. Because look, Thursday, right, what ends up happening, this is something that I was talking to yesterday with a couple students, but I want you guys to go back test this, right? Because this is something where it psychologically throws you off on the news weeks where we have FOMC and NFP. So I back tested this for like, not even back tested it, but I've just really been testing this theory for the last couple of NFP FOMC weeks. And Wednesday is literally, for the last like 3 of them, have been a day where it sweeps the board, right? So Wednesday, right, you can see we had a little bit of buying opportunity, but for the most part, oh no, Wednesday is here, right? We had a little bit of buying opportunity, but for the most part, it was sideways movement, right? This price action is not something that we ideally want to trade in. This is known as what, right? Drop in the chat if you know what this is called, this sideways movement that we have in the market. Thank you. Go check out upsidedownshop.com, right? The man that made this hat. Hard. Consolidation. Perfect. Anyone that said consolidation, right? Beautiful, right? You don't want to be traded in consolidation, right? It's ranging, absolutely. But to me, it's just real sideways movement. It's nothing really too picky. So one thing that I want you guys to notice, right? Price overall is bullish. So I want to ask you guys a question. Do you guys think just because we start falling over, do you think now we're bearish because we start to fall over? Or what do you guys think that price is doing, right? For those of you that have been hopping on the calls and been studying education, what would be the reason as to why this would occur? Beautiful, right? Sweeping liquidity, absolutely. Absolutely. Mitigation, absolutely. Liquidity cap, absolutely. Those are both right, right? But one thing to note, right? We have liquidity right here. Why is this liquidity? Because you have to think about fundamentally, if you're buying, right? If you were to have been buying on Monday, right? You would have either bought here, you would have bought in here, or somewhere within this area, right? Not a lot of people would have really gotten at the bottom here. So I would say bulk of the liquidity, right, is in here. This is where most of the orders are. But what does that also mean? Where are their stop losses going to be? They're going to be right below this area, right? But one thing to note as well, on top of the fact that we have this liquidity, we have these equal lows, right? To me, this is where most of the liquidity will be. And what do we have right below this liquidity? So we have this liquidity, right? In terms of looking to the left, I want you guys to write this down, right? Look left to get right. A lot of you don't look left, and that's why you guys get bodied. Like, you guys be getting, like, in Toronto, we call it a backstreet, right? But you guys be getting ran through. No cap. Like, you be letting the markets just literally just, like, you be letting the market violate you guys. And it's like, I don't like to let the market violate me. I like to violate the market. See what I'm saying? It's like, you got to talk nice to the market, right? So I like to sit there and not tell the market what to do, but I sit there and I read the market, right? We have to stop trying to force the market to do what we want it to do and just start taking things for what they are, right? Because what I can see right below, right, looking left to then get right, all of this in here is relatively healthy price action. There's nothing inconsistent in terms of the algorithm. The only inconsistency I could really see would be in this particular area, right? But just based off of this wick, I'm sure if we were to break it down, here, let's actually go break it down. Right? I knew it, yeah. So 30-minute wise, this is filled perfectly. You see how in between the bodies of the candles, we have a wick that wicks down. Look at where this wick comes down to. Right? So this wick that comes down, it comes and fills this insufficiency perfect. Right? Even here, insufficiency right here. Look at where we come and tap. We come and tap this. Right? Watching price continue. What do? We create another little insufficiency in here. Let's see if we come back and we fill this. Right? Look at that. Come back. Tap it. Foop. Like, it's magic. It's almost like the shit that we do works. Excuse my French. But it's like, when I see people get embodied, the only reason why you lose and you trade the way that we do is because you get in too early. You're impatient. And it's because you over leverage. Like, those would be the only reasons why you can't possibly lose if you follow risk management and are patient. Because the best quote that I learned was, sometimes the best trade is no trade. And you have to ask yourself, like, there's sometimes a trade that you're looking at is not the best trade, right? It could be a trade with opportunity, but I feel like every trade has an opportunity. It's 50-50 at the end of the day. But how come you guys see some people are more consistent than others? It's because of the plan, right? Because looking at this, let's see if price even comes back down even lower, right? Not even, right? Look at this. It literally just comes and fills insufficiencies over and over again. What does this look like, family? This literally looks like a staircase. What are we doing? We're higher low, higher high, higher low, higher high. You guys have to notice something too about this, right? As we're coming back down, what do? Right? We capture liquidity. Like, you have to notice, right? As we're driving up to make this higher high, right? We get a little bit of a retracement here. So what do? People buy in here. People are buying here to then have us make a higher high. Then we whoop all the way back down to this real valid last higher low. And now this becomes our higher low. Why? Because once we make this low, we then proceed to make a higher high. So it's paying attention to the drives. Like if you're looking for a bullish move, you want to pay attention to the drive down that captures lows, but then sends us in the direction that you want it to go. Because like I said, a lot of people get kind of thrown off when the market operates just because of just how quick the market moves. But one thing I want us to notice leading into Thursday, right? So buying wouldn't have necessarily been valid, right? Until we came into here. And even in here, it wouldn't have, like, this would have been a crazy entry if you caught it. But at the same time, there was nothing that really confirmed the fact that, okay, we're bullish. So what I was personally waiting for was for us to close above this 15-minute candle. 15-minute breaks of structure are going to be your best friend on gold, right? So paying attention to this, right? So we see price breaks above this 15-minute area, right? So one thing to note with gold on Wednesdays, this is literally, I want you guys to really just be aware of this. On Wednesdays, when we have FOMC and it kind of moves sideways, the Thursday night leading into Friday is almost always gonna give you that, like, that move. Like, most people are taught not to trade during like Asian session, Tokyo session. You're taught to trade during New York. Almost every single time market open, that's why market open, I caught my entry at like 6 o'clock, right? Thursdays are the days where it's like you're gonna catch the move at the beginning of Asian that you can hold into Friday, right? And it's happened literally the last 2 or 3 news, right? So looking at this is still into the same day, right? So letting it play out, letting price play out, right? This is still New York, same day. So now, boom, market opens. So the first thing that I was looking at when the market opened, I'm like, all right, cool, calm. What do I see instantly? I'm like, all right, cool. There's liquidity here. What does that mean? People bought and people have their stop loss literally right below here, right? All I know is that there's a lot of people that bought in here. There's a little bit of a support forming, right? So what am I looking for? I'm looking for a drive below these lows, okay? So what I mean by a drive below these lows, I'm looking for a drive below these lows and then signs of just bullishness, right? Ideally, I want to see a quick impulsive move down and then a 1-minute candle just kind of pop up. So looking at this from the 3-minute perspective, the only thing based off of the algorithm that I could see that needed to be filled, right, was this. We had a little bit of a 3-minute insufficiency right down here, right? So ideally, when it came down to potential buy scenarios, right, the ideal setup was a little something like this, right? And the first TP area was about 41, right? So it was about a 1 to 6, right? To first target. That was just the first target. But overall, we were targeting these highs, right? Why? Because of the seasonality of gold. How many of you guys are aware, like how many of you don't know what seasonality is? Like when I say seasonality, how many of you are just oblivious? Like you guys are not hip. You guys don't know what I'm saying. Like drop in chat. You guys know what I'm talking about or you're clueless? The man, I'm just saying me. Heard much of it, don't know it. Clueless. I don't know. Me, don't. Clueless. All right. Boom. Clueless. You guys are clueless? All right. Say no more. Cash is here. Cash is here to save the day. Not all heroes wear capes. Not all heroes wear capes. Wait. Keep passing my cape? Yeah. Not all heroes wear capes, but seasonality. Okay. So listen, there's a chart for everything when it comes down to seasonality. There's a good, I'm sorry. I'm telling you, I just be, I could be like an actor. I feel like I could be doing like plays and like stuff like that, right? But I want you guys to really, like, all jokes aside, you could trade anything. Like, there's corn right here. You guys know the corn that you guys eat? For all my Mexicans, right? You guys love corn and you love putting spicy stuff on the corn, right? You know, Mexicans just love putting spicy stuff all over everything. I never got it, right? I never get it, but candy, hot, it makes sense, right? So corn, cotton. Your clothes probably made of cotton, right? Wheat. You guys like bread? You guys like carbs? Right? Cocoa, right? Soybeans. You could trade coffee. I drink a lot of coffee. For my coffee drinkers, boom, coffee futures, right? But where I want you guys to go to is click on commodities, then go to the second page, and it'll be like the fourth one, right? I'm going to drop this link in the chat for you guys too. But this right here is going to be some sauce for you guys, okay? Because right now, where gold currently is at, my best entry that I'm up 1,200 points, right? So 1,200 points from last month. And it was because of this seasonality, right? So the reason why I was able to take that position and hold it was because of my understanding of typically what happens at the beginning of January, leading into February, and then also March. So I understand we're going to be fairly bullish now until probably the end of February is where we're really going to flip towards the downside and get a little bit of a retracement. But what I want you guys to pay attention to is January. Look at January. You guys see how during the months of January, it looks like we're going up. What I want you guys to do is go and back test the last couple of months. So if we really just even, right, we're in the 3-minute right now. So I'm kind of run through this entry with you guys and then show you guys that after. But ideally, right, we can see price slowly starts to trickle down into this area. And I believe we actually took this position here, right? So being able to get into a position as soon as we take this low, right? Fundamentally, what really just caught my eye was the fact that, okay, the 15-minute engulfed, right, to the upside, as well as the fact that we just barely swept below that liquidity, right? So in terms of perspective, right, we can see that initially us coming into here, right, what is one thing that we want to see when it comes down to a structure? We wanted to see a break of structure back towards the upside. So we captured that low. Then immediately after, what did we do? We broke to the upside of the 5-minute. So right here is where this 5-minute break of structure happens. If we see what happens right after that 5-minute break of structure, you guys see how we break structure, we continue to go up, slowly trickle, 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 then we get a wick. That wick is important because it comes into this insufficiency. It comes into this imbalance, right? And this imbalance, we can see right here, imbalances are probably going to be where you get the best entries and also where you're going to be able to take the best, take profits, okay? Because we filled this insufficiency right here, okay? And once we did that, you are able to now break even on these accounts. So how I'm able to sit here and absolutely destroy funded accounts is because I could really pass a challenge in 1 or 2 trades by risking literally like 0.5%, right? So for example, right here, let's say, all right, boom, we took this position here. Our stop loss below the low, we're risking 10 points, right? Our first target we discussed was about 41. So it'd be about a 1 to 9, right? And where you're able to stack on your positions is in these insufficiencies, because let's say you miss this insufficiency, that imbalance right there, right? If we go to the 15-minute time frame, right? To me, once we make higher highs, so on the 15-minute, we not only engulfed, right? But to me, we broke above whatever little counter trend that we had. So some people would be looking at this like, we're bearish. We broke structure to the downside. This wouldn't be a valid break of structure to the downside. Why? Because once we make a higher high, like we literally were bearish prior to this down push. We were bearish with all of this move. Where we broke structure and actually became bullish was in here. So as we break structure, right? Let's say you're taking a funding challenge, right? And you're sitting in here and you take this position. Like I said, 10-point stop loss, because this is where we took it. And then ideally we were looking for re-entries, right? So where did the re-entries come into? This was the first type of re-entry right here, 32. But do you guys see how in here, price is just clean? It's slowly walking its way up. Like it's going up, but it's not just running. That is very, very beautiful price action, okay? So now going back to this 15-minute time frame, right? Now that we actually broke out of this range and closed above, the one thing is gold is never going to leave you, right? So immediately looking at this, I would say that this candle, we no longer have to come back down into this candle, into this higher low. Why? Because we already came back, we mitigated, we filled any insufficiencies in the algorithm with this wick. So now the next area that I would really be targeting would be this institutional area. So this series of down candles. Why is this series of down candles important? Why would we be targeting this? What do you guys think? Why would we target this particular area? What aligns with this area that you guys can see right off the rip? Liquidity, what else? There's one thing in particular that is very, very, very clear. If I get rid of this box, boom, imbalance, perfect. So imbalance right here, okay? So to me, we have an insufficiency there on the 15-minute, breaking down to the 5-minute, right? There's nothing really too much on the 5-minute, right? So the 15-minute to me just made the most sense, right? But then looking at it from the 5-minute perspective, what we do have, where's it, the 5-minute? The 3-minute, to me, we have this candle right here. Right, so those would be really the only two areas that I would be kind of looking to pay attention to based off of just the 15-minute. Like I said, we dug down into the smaller time frames based off of a 15-minute point of interest. So if we were to take a potential position like this, it would look something along the lines of this being very safe. So about a 13-point risk, right? Ideally, we would have been looking to target, like I said, these highs. Right? Bye. Have a good day. But also, right, we have this 3-minute area that we had marked up here. So this is where you get that even tighter potential risk to reward scenario, right? Smaller setups, almost like half the stop loss is cut in half, right? So whereas the one to the right is a 1 to 19, right? This now becomes a 1 to 65 was our target. So it becomes a 1 to 34, okay? So now that we sit here and we take a look at this, a keynote as well, right? And this is where a lot of people go wrong. So let's say, for example, hypothetically, like we're looking at these re-entry areas, but we should have already had our first entry in this area. Where most people are going to go wrong in their funding is they're not going to pay themselves at all from this. So what I personally did was I paid myself about 75% of my position where once we made a new higher high. So once we closed above here at about 40, I closed most of my position with the anticipation that we were going to come back down, right? So where a lot of people will go wrong was they'll maybe take this entry or miss this entry, right? Then be waiting, they'll get in late, anticipating the price is just going to run, right? But then what will end up happening, right? Stuff like this. They'll see, oh my goodness, right? They'll close it and then they'll be like FOMO. So they'll try and buy back in. So they'll close it as it gets up here, but then they'll try and buy back in here. Then they'll try and buy back in here, right? And they're buying back in into places that are just set up to basically trick and trap them into the market, right? Because if we were to really sit here and now watch what happens with price, right? What I really paid attention to was, okay, we sat here and we broke 5-minute structure when we closed below here. So what I was looking for was like, okay, sheesh, we broke below this 5-minute area. I was ideally looking for a push up into this area. All right. Let me see where I sent it to. Boom. So this is literally the area that I was looking at, right? So you can see right here about 39.50, right, is where we're looking for shorts into the same area, like exact same area that we're looking at, right? So I'm saying there's no cap. Like this is really what we were doing, right? So we were looking for sells basically here with stop loss right at 40. I think it was 40.60, right? It was right above this high, if I'm not mistaken, right? So ideally, even though we were looking for buys, right, we were looking for longs, what we were able to do is identify this smaller time frame breaker structure, right, and be able to look for positioning to see, okay, the 5 minute is going to be the first area where we break, right, before we break on the higher time frames. So I was like playing it both ways, where I was like, all right, cool, we could come back in here and I would anticipate us to get to at least here, and I would look for a reaction out of this area to then see us continue higher. So what ended up happening, right, was price came all the way back up into our area. Like, look at this. It fills this insufficiency perfectly. And then what ends up happening? Lag around, lag around, lag around. Right? Final pop up here, which was like, to me, that was that final plate. Right? This is where actually I closed most of my sell, if I'm not mistaken. Or most of my buy, right? Once we started to close down here. But the same screenshot that I was showing you based off that 3 minute area, right, was based off of this, right? So I was really just looking at the fact that, okay, we failed to break above, like we failed to make a higher high. So the fact that we failed to close above this twice, like, so we literally broke down, came back, tested this, right? And what I was looking to see was, okay, if we come back into this candle, if we don't break above this again, I would anticipate us to, like I said, break back down into this lower area. What ended up happening? Price comes perfectly into this insufficiency, right? And we can see that price fills all the way to the top of this 5 minute candle, right? But structure wise, we never actually get a close above. So we never actually close above this high. It looks close, but we never actually close above. So just now understanding that, we're able to position ourselves in a way where, okay, you're going to have the lowest risk possible if you sit here and you take your position here with stop loss right above the high. That's about a 4-point risk. First take profit, just based off of what the market is giving us right now in terms of data. To me, we had liquidity all in here. So I would have at least looked to TP at 34.60, but ideally I had my TP set at 34 on the dot, right? So it was about, to me, I risked about 6 points with spread. So it was about a 1 to 10, right, to TP, but we could really see, right, price breaks down from this entry point, right? So we have a 4-point risk. But then as we come into this area, what happens, right? We start to get a little bit of a reaction, right? So on the 1 minute, like, look at how fractal this is, right? So 1 minute break structure right here, right? When we close above this area. And this is why I tell you, IPAs are going to be your best friends. You just need to identify IPAs that line up with valid points of interest outside. Like, there's imbalances everywhere, but I feel like people constantly ask me, what are the right imbalances? The right imbalances are going to be the ones that line up right with. So for example, if there's an imbalance right beside liquidity or right below liquidity, that's going to be an imbalance I would rather play over an imbalance that's just in the middle of nothing. And IPA essentially stands for insufficient price action. So insufficient price action is just really what happens in the market when, let's say, for example, a news event like today happens with NFP, right? An IPA will get created when there's just a lot of volatility, increased volatility. And basically we create like little gaps and little areas where the market, in order to be healthy in terms of the algorithm, needs to be constantly buying and selling. So when we have big impulsive moves like this, without coming back down, this is what I tell you, right? Yeah, you are right. You are still right. Right. But in terms of the IPAs, like looking at something like this, right? Let's say we sit here, we take this IPA to the low, your stop loss is literally 8 points, right? And our first target would be these equal highs. So our entries become targets and our TPs are targets too. Because you notice how we took profit, and as soon as we took profit, the market reverses. Like there's so many times where, how many of you guys have been on a call where I'll say TP on NAS and you don't TP, and then you look back 5 minutes later and it's back at your entry? It's because of the simplistic. I don't just say TP to TP family. Like if I say TP, it's because it could get sticky right now, right? The market could reverse. But ideally, looking at this from this perspective, this would be a good first target. Overall, obviously, we have that higher target, higher point of interest, but looking at how the market comes back and fills, look at how many opportunities you would have had within this insufficiency to take a position with literally zero drawdown. Look at price develop. Okay, so now looking at the 15-minute, we can see that, okay, we got a clean reaction out of here. Now, let's say you missed this because you suck and you're scared and you lack confidence, right? Whatever you want to chalk it down to, right? It's just impatience, right? It's impatience and lack of confidence. That's really going to be it, right? Everything else is just you beating yourself up for no reason. And it's like, you could keep telling yourself stuff that makes you feel bad, or you could sit there and I tell myself I'm the best trader. Like the self-talk that I have on the charts, I feel like it reflects in the trades that I call out, because like, how many of you guys ever sit there and see just me call out a trade and you're like, yo, he's bugging. It looks like it's going to drop, or it looks like it's going to fly. Like, I feel like most of you guys be looking at me sometimes. Like, I saw someone in the chat yesterday. I'm like, yo, I'm looking for buys. And they're like, yo, I think it's going to drop. It just tanked. I'm like, yeah, I dropped my buy entry. Like, literally, like, I'm that type of person, right? So what I would look for next is, okay, this is that quote unquote lower high that to me would be valid. Like, I would want to see us break above here to then validate us coming back and playing off of this 15-minute area, right? So if we look at what happens, right, we break above this area on the 15-minute time frame. So immediately now I would go to the 5-minute again, and I would look at price. I'd be like, okay, where makes sense in terms of entries? Just looking at it immediately, I would kind of look at this insufficiency right here. Lines up with our institutional area, right, which would be that black line. So to me, right, once we break that structure, I would anticipate then now us to at least come back into this area, right? We could potentially come lower into these two candles, but this is where the only insufficiency in the algorithm really lies, in my opinion, right? Poof. It's like, it's the same thing over and over and over again, but I want you guys to really pay attention, because the news, right? The news is so fractal, because it's like, you could have been so right. Like, you could have sat here and you could have been in a position, right? Let's say you bought it in here. Right? You could have been in position here. Your stop loss right below the low. Right? Take profit. Whoop, whoop, whoop. One thing to note is there's so many wicks below here. There's a lot of liquidity, right? There's liquidity here. So there's a lot of people that bought. The thing about news is that news is going to sit there and hit out people right before news to then make. So if you're right, the news will make sure that you get hit out. So if you were in buys, what the news is typically going to do is hit out early buyers to then get them fearful to not buy in again, so that price goes up. Because there was literally an opportunity right at news open. Like, I was sitting there on the 1 minute and I was half asleep. That's why I didn't take the position. But I sat there and I'm like, on the 1 minute, I should just bought it. Right? But looking at this, right? 8:10. So the news is at 8:30. Right? So Boom. So if we were to go to the 1 minute, what do I tell you guys that the market needs to do in order to go up or down? We need to capture liquidity. We need to capture money, right? So if you had entered in here, you would have got stopped out. Why? Because what happens right at 8:24, 6 minutes before the news, right? We run below these lows, this liquidity. Then what happens? Exactly what I tell you need to look for. Bullish movement. You need to look for some type of pressure. Like, why is this bullish? Because we engulf. That means, okay, to put into perspective, the last 5 minutes of gold, if you had sold it anywhere in here, it would have gotten eaten by just one buy candle. So what does that mean? There's buying pressure behind this, right? Why is there buying pressure behind it? Because we just captured liquidity, right? We just hit people's stop losses that got in early, right? So now, based off of this 825, where's your potential entry? Well, shit, we break above here. You look for a push deeper into this candle if you could potentially get it, right? Stop loss below the low, right? TP up here. Taking a look at what happens, right? Where do we come down to? We come down into this 1 minute down candle. Like I said, gold will typically fill things way better than most of the things that you're trading. So look at this, 829, right? So we tap this area. Then look at this, 1 minute. This 1 minute candle goes crazy, right? But let's say you were scared because you watched price go all the way up to 43 and then it came down. This was a crazy wick, right? If you're not experienced, you're going to be scared because, you know, I saw someone like Silva. Silva's an experienced trader. I saw him drop his entry and I'm like, okay, cool. Silva caught the news, right? He was able to sit there and actually be attentive on the charts during the news versus somebody who maybe took it before. Like I took my trades before, right? And it's because I knew that I wasn't going to be up for the news because I knew that my body was going to be shut down because I had barely slept. But now looking at this, right? The 1 minute has officially broke above here. Where does our new insufficiency lie in terms of the algorithm? Where do we need to correct and fill? Well, right here, right? We have an insufficiency right here at this black line, right? We have an imbalance. So if we look at this potentially, right, what you would be able to look for in this particular scenario, I don't know if we're going to fill this, but I know that we filled a few things, right? So you could have got in with a 20-point risk, let's say, for example, right? If it came down to this black line though, right? Taking a look at what happened. Magic. Woo. Magic. Woo. Magic line. It just hits the magic line and then does the boogie, right? So let's say you were even scared to get in at this insufficiency. Once it engulfs, now your new entry area becomes this 1 minute candle. I guarantee you it at least tapped this candle one more time before it flew. What did it do? It tapped it one more time before it flew. Like I'm telling you, you're never going to miss no entries. The only people that miss trades are people that are impatient because I'm telling you, this is the type of trade where it's like the amount of points that the gang caught this week, people don't even catch that in their whole life. Because look, boom, 3 minute. If we look at it from the 1 minute perspective, right? So we have two now potential areas where we could come back down into. We could come back down into this area, ideally in here. Or realistically, this first area where we're filling, that's an IPA as well. But I wouldn't play the higher area. Why? Because to me, it's like gold will always respect like these lower areas for the most part, right? And if we see what ended up happening, I don't know if it actually came down and filled this. Yeah, because it didn't really have to come that deep, right? All it technically had to do was tap this candle, which it did. So as long as it tapped this candle, it would have been good. Why? Because this was the last drive down before we made a higher high. This was that last buy, right? You might look at this, no cash, this was the last buy. You have to understand that the banks are not just getting in one candle. Like, they start pushing price down here. They just stop it here. That is the lowest point that they get to, but they actually start pushing the money or the market down here, right? Because you can see we come and we tap this area. If you were to have taken an entry off there, let's say, boom, right off that area, stop loss right below that low, 27-point stop loss to the high, at least a 1 to 4, right? 120 points. Like, you could have easily ate, right? But this is something where the only reason why you wouldn't have made money today or been confident enough to get in on the news, like, news is really easy. Like, I don't know if you guys have been hopping on my calls for like long or if you guys are like new, but the news is like, trading is easy. Trading is not hard. Trading is only hard if you tell yourself it's hard. Trading is only difficult to the people that make it difficult. Like, trading is easy because it's like, this is something where you could have caught 250 points from that particular entry, getting in late, like literally waiting for as many confirmations as possible. You could have got in late and caught that move. If you were early, you would have you would have caught it at the beginning of the day, right? And you would have had no drawdown. You would have been able to catch a move right at the beginning. So on the chart side, this is really a breakdown of how I kind of did this. But what I really want to do right now is kind of share with you guys some things that are going to help when it comes down to lifestyle. Like, I believe that we need to implement a few things and develop a few skills that won't only apply to the market, but they're going to apply to our business. They're going to apply to our quality of life. Because one thing I want you guys to notice is, in this industry and in this field, people are loud and people are lit and people show up for one or two reasons, right? Normally people show up when they're making money, right? And the only other reason why people would show up is because they genuinely like the educator or they like being a part of particular calls versus other calls, right? So drop a 1 if you guys could agree with that, right? You might not hop on every call, but you hop on calls with purpose, right? Because I know that's me, right? I like to definitely hop on calls to get purpose, to get a little bit of value and just be with like-minded energy. You know what I mean? I like to be around good people. But when it comes down to a skill that I feel like we need to develop, and one tip that I'm going to give you guys that I personally worked on is greed. Okay. So greed stems from our inability to be patient. Why are you impatient? You're impatient because you want money now. How many of you could say that you guys have done stuff because you guys wanted, like, you were in financial pressure, right? When it comes down to your trading, like, how many of you have blown accounts because maybe you wanted to try and pay a bill? Maybe you wanted to get a withdrawal. Maybe you wanted to do something, right? And you just ended up messing around, right? All of us have really been in a scenario where we've done things like that. So a skill that we can do to work on that is sitting there and actually analyzing, okay, like, you have to ask yourself questions. So you have to sit there and ask yourself, what is your relationship with money? I want you guys to really write that question down and answer it. Like, go do what you guys do when you guys like to journal, but ask yourself, what is your relationship with money? Because the generic answer, oh my God, Cash, I have a good relationship with money. Oh my God, Cash, I like money. Oh my God, Cash, I want money. Everybody says that. But then I ask people, how much money you have in your bank account? Oh man. Well, I just had this bill come out. Rent's due tomorrow. I had this, and it's just like you start hearing all the excuses. It's like all the excuses are coming out. It's like, okay, I didn't ask you for all of that. I just asked you, all right, how much you got in the bank? I didn't ask for the excuses. So it's like people's responses to certain, what is the best relationship to have with money as a trader? The best relationship to have with money as a trader is to not look at it from the perspective of a trader. Because if I take the markets away from all of you, who are you? What do you stand for? What are you able to do outside of the markets? So the relationship that I have with money, I don't look at it from the perspective of a trader. I look at it from the perspective of an entrepreneur. I don't limit where my money comes from. But at the same time, how you do one thing is how you do everything. So if you have a poor relationship with money outside of trading, it doesn't matter how good your relationship with trading, because we are who we are most of the time. So you might hop on the call some of the time. You might hop on the train some of the time. But what we have to do is ask, like, my relationship with money right now is to the point where it's like money flows so abundantly. Like, do you guys ever just be finding thousands of dollars? Because that's the state of money that I'm in right now. People be getting pissed off. I saw people, how you accidentally make a rack. I dropped that in the chat the other day. You know, I be trolling sometimes. But yeah, I accidentally made a rack. Right? And it really was an accident because it's like I hit my percentage, but I was willing to risk a little bit less than I normally risk to make that extra change, and trade went crazy. Right? So everything is relative to you. Like, your life is hard if you tell yourself your life is hard. Your business is going to be difficult if you tell yourself your business is difficult. Like, what vocabulary, what language do you use with yourself? Because I talk to some people and they're like, yo, I'm going through this, I'm going to. No, you're not going through nothing. Shut up. You're not going through anything bad. You're going through something that is helping you grow. The reason why you're staying stuck for weeks and weeks and weeks is because you keep convincing yourself things are worse than they are. Like, what if you losing $5 was only to prepare you to make 100? Are you still going to be mad at the $5 loss? No, but you're mad because you don't see past just the immediate. I'm that type of person where it's like, is Romeo still on here? Boom. I was talking to Romeo, right? And I was telling him, I was like, yo, I don't really fuck with people. Like, I don't talk to a lot of people, right? And he was like, yeah, like, you know, like, I know. And I was explaining to him, I'm like, I feel like everyone in my life has a purpose. I'm like, I feel like there's a lot of useless people that just exist. And it's like, I'm not on the type of timing right now where I can be around someone who's complaining. I can't be around people that are low vibrational, that are not like, okay, for example, if you're not open-minded and you're broke, I cannot be around you. Because how are you so dead set on habits and patterns when you're not even in the position that you want to be in? So you're right now not financially thriving, but then you're sitting there saying, yo, Cash, I don't want to listen to what you have to say because that doesn't make me feel good. It's like, what the, oh my God. Here's another question I want you guys to ask yourself. What is good? What is good? Here, actually, no. Boo. Let me talk to some people with cameras on. Anyone with a camera on, I'm gonna let you guys unmute yourself. Someone unmute themselves and tell me what good is in your perspective. I want to hear a couple people talk. I see you cheesing, Laura. Boom. What's good? What's good for you, girl? Let me know, Laura. All right. Unmute yourself. Oh, I see Jayana.
Oh yeah. I'm unmuted. I think good to me is really just peace, really just enjoying where you are in the moment, and like that's when I feel like good.
Okay, beautiful, beautiful. So she said, for those of you that couldn't really hear, she said like peaceful, right? It's just something that makes you just ideally feel fulfilled almost, right? So anybody else have a definition of good? You could type in the chat if you don't want to unmute yourself, but I want to hear you guys talk if you guys want to unmute yourself.
I think good for me is probably, feeling happy in a sense, right? Where you don't really worry about anything else and you just kind of in a state of mind where you just kind of focus on really what you're doing and really not caring about any sort of distractions in a sense. I think that's good.
Okay, perfect. I like that. So would you guys, okay, I'm gonna ask you guys a question, right? Would you associate good with happy? Like, would you guys like drop a one if you guys say that good and that happiness aligns? Got him. I got all of you. So listen, look. If your goal is to be good in life and happy is something that really aligns with you feeling good. What I want you to imagine right now, and every single one of you guys, let me know how you feel in the chat. I want you to imagine that everybody in your family dies tomorrow. How do you feel? You feel good? You feel happy? You feel happy? Your end goal in life is to be happy and your whole family dies. How do you feel? But everybody is going to die. So if you don't sit here and understand that being happy, there's certain points where life is not going to be happy for you. When my uncles died and my cousin died, it wasn't happy for me. When my brother got shot, that wasn't a happy experience for me. Like, you guys want to be happy? What is happy? These are things where if you want to get into flow state, you have to stop looking at things as good and bad. Things just are. Things exist. You tell yourself something is good and bad. You tell yourself that you have anxiety. You tell yourself that nobody wants to join your business. You tell yourself that all of these things are possible or impossible. It's you. It's you. So for me, I don't want to feel happy when I win a trade. I don't feel happy when I win a trade. You know how I feel when I win a trade? The same as when I lose. Some of you guys be so happy when you win a trade. I'm dead the same when I lose. When I lose, I have just as I might just be yelling different words. Well, I'm yelling. I'm yelling. I got the same energy when I win and when I lose. Why? Because I understand that you can't have one without the other. You can't accept light without accepting darkness. You can't accept power without accepting struggle. You can't accept wealth without accepting poverty, because you have to make a choice. You have to make a choice. Like, you haven't made the choice because you're only looking at the one side. I get life has been hard for you. I get it, but you're here and you're pushing and you're on this call and you're around people that care. You're around people that want to see you do good. So stop waiting for other people to believe in you and believe in your fucking self to do what you know you're capable of doing. You guys all have so much power. And we don't have a lot of time. You're only getting older. So stop making things worse. There's nothing worse than functioning in civilization and society, knowing as a human that you should be doing better. All of us feel like that. All of us feel like that at some point. You know you should be doing better. You know it. That's why you feel bad. That's why you beat yourself up, because you know you should be doing better. You know you shouldn't feel like shit. You know you should be happy. You know you should be around people that make you feel good and people that work hard, but you're choosing not to be. And then you wonder why you don't get success. It's like, I cut off everything. I cut off my family. I cut off my friends. Everything that's meant to be comes. People come into your life for a reason or for a season. Right? Everybody, I'm gonna wrap up the call with this, right? Everybody in your life, right? Everybody in your life that is assigned to you will never leave your side, right? So I'm talking about your day ones, not even your day ones, but your riders. I want you to think about the people where if you were to pick up the phone right now and call them for anything, they'd pick up and they'd be there for you. I want you guys to imagine those people. Right? Because I literally oh man, I forgot what the fuck I was gonna say. I'm not even gonna hold you, right? I sat here and I'm sweating. I'm sweating. Like, you don't understand how much, like, I really just love doing this. I don't have to do this. I make chairman checks. All these guys that are chairman, cool. That's cool. I've been making chairman checks on the chart since I was 18, 19 years old. Chairman is cool, right? But you know what's cooler? Is being able to travel with your friends, being able to find people that you resonate, like being able to find relationships. Like, some of you guys come into this entrepreneurship field and you guys meet other like-minded entrepreneurs, and then boom, now all of a sudden 3 years later you have a kid. It's like, you know how many people I done seen that met their baby daddies and their baby mamas in this industry, right? And it's like, that shouldn't be the intention. But what you have to understand is when you're progressively vibrating and getting better, you attract better people. The people you're attracting into your life right now are vibrating at the same frequency you are. Like I said, I'm here. Like, I don't fuck with a lot of people. So it's like, to me, like, I don't text people, I don't call people, I don't do nothing, right? But it's like, the people that I do call and the people that I do text and the people that I do check in on, it's like, the amount of love that I have, if I'm doing that, it's because there's something internally, there's something that you possess that I see that maybe you don't see, that causes me to just sit there and be like, yo, keep grinding. Like literally, like I was talking to Romeo, right? I'm using Romeo a lot because we haven't seen each other and we were having conversations yesterday. But I was telling him yesterday, I was like, yo, bro, like, you're good at so many different things, but I feel like you're trying to do almost what I'm doing, in the sense of like, I build a business online. Like, Romeo is a person, he hates social media. He's a ghost. He doesn't use that at all. Cash, I post on social media every day. So for him, I have to tell him, I'm like, yo, social media is not for you. I get it. So it's like, don't force yourself to do something that you don't want, but get in that trading bag, right? Be around the network, be around the community, be around the people that have the results. You don't have to do anything that you don't want to do, but don't be closed-minded to things that might change your life. Because what I had to tell him was, building wasn't my goal, but it's like, you know how many people I know that are making a lot of money now because I put myself out there? Like, I'm a high school dropout. I'm gonna be honest with you guys. I've been making more money than my teacher since I was 21. I just turned 22. Like, literally, like 3 months ago. Like, you have to think about it. There's so many people that are old doing this. Like, there's nobody that's my age that I really sit here and they're like, they're doing this shit type. Like, they're doing it like, find me another person my age that's doing it like this. Like, for real, for real. Like, and it's not to brag. Like, I'm letting you guys know, like, oh my goodness. I had $12 in my bank account, negative $12. My mentor, if you guys know Mike Miles, he's an educator. I remember he told me, we got back to Canada, I went into the convenience store and he's like, yo, you could buy me a Red Bull. I don't know what it is with Americans and energy drinks, your Bangs and your Red Bulls, and you guys are just different. But anyways, he's like, can I get a Red Bull? I went in there, I was trying to buy a Red Bull and a pack of backwoods, right? I'm gonna end this recording.